good night, good morning, good evening. Welcome, everyone. I think we are live. I never know for sure if we're live or not. So if jumping on right now, just say hi on the chat, give me some love, so I know I'm not talking to just to myself here. And yeah, I know everything's good. Let me know if the audio is okay, if the audio and video is okay. Hopefully everything's working and hopefully we are live. So let's let everyone know that we are live. Let's just say to the community, we are live now. Come on in. Come on in. Come on in. Okay. All right. So let's see what are we gonna do today. Today we have a lot of things to talk about. Actually, it's gonna be a very important class. Very important one. I even have a cup of coffee here, so I have the energy. Hello, Rafael. Audio video is great. Thank you, man. It's good to know that everything's good and we are good to go. Cheers. The market's moving a little bit. As usual, I think every time I start a live, seems like the market wants to move. But it's okay. I don't trade on Saturdays. That's my rule. And I'm gonna follow my rules. I'm not usually... Breakouts usually are not good on the Saturdays. So it's better for me to just stay out of the market, be patient, wait for Sunday. Sunday is usually good. But yeah. Just gonna give some minute or two for my people to jump in. Okay, so today we're gonna talk about chart patterns and technical analysis. Two of the probably one of the most important concepts in trading, that's for sure. Rafael, is there any question, anything you want to ask before we start? Anything from maybe yesterday or anything that you'd like to share? Please. I know more people is jumping in now. I can see it here. I can't see the names, so that's why I ask people to just type in the chat whenever you come in. Don't be shy. We are a very small community, but yeah, we are here together today. All right. So the topics today is going to be how to open a free account on TradingView and set up the chart, explain what candlestick is and how to read it, teach chart patterns, explain how professionals do technical analysis. Yeah. So I think before we start doing this sort of great at the moment, okay? Good. So before we start, actually, I need to get a few things out of the way, and also to give some moment for people to jump on this live. Obviously, we cannot talk about chart patterns and technical analysis without mentioning TradingView, which is the website that I use and probably most of the traders that I know use as well to look at charts and to analyze their trades. So if you are really just beginning on this journey, you're gonna need to have an account on TradingView, and that's very easy to set up. So we're gonna do that in just probably less than 5 minutes. And if you don't know, this website is just tradingview.com. You're gonna look at this home page here, And we're just gonna go here to this signing option, and then in here you can use your Facebook account, Twitter, Yahoo, Apple ID, LinkedIn, and Google, or just use an email as well if you want to. I'm just gonna use not my main one, but my secondary one. And there we go. I'm already logged in. You can see here that it changed. Now there is like a little D here, meaning that I'm logged in on this account, which is a free account. Okay. Obviously they have different plans. So if you go here to pricing, you can see that they charge $155 a year or $13 a month. Then they have the plus, which is around $25, and the premium, which is around $50 or $600 per year. I do not recommend, if you're just starting, to pay any of these plans. Just use it for free. And once you're ready, you can start with the essential. You know, don't start with the premium, because you're gonna be wasting your money. You're not gonna be using all these features. So just start with the essential, and also use this 30 days free. All right. And I also recommend you guys to wait for some sort of sale. They usually do some like 30% off, 40% off once or twice a year. So wait for those opportunities to buy your plan. All right. So there you have it. So once you're logged in, you can, let's just quickly go to the profile, and then you can see that this is a sort of also like a kind of social network kind of thing, where you can follow traders. You can follow me if you want, but I don't post anything here. But you can follow traders, you can be followed, and you can have a sort of profile, like a social profile in here, where you can post your ideas, you can post your scripts, your indicators, and things like that. But the most important product that they have, it's actually these super charts. That's where we're gonna see the charts. Okay. TradingView is the best platform. Love it. Yeah, definitely. MetaTrader doesn't fit to me at all as well. I don't like the charts on MetaTrader. I think it's very old school. TradingView is very counterintuitive. Like, it's very easy to use. So yeah. So when you click to these super charts here, you're gonna have like a chart like this. Okay, you're probably gonna have the volume indicator, because it's like a default setting. It's like a volume indicator, and then probably they're gonna have like a Apple stock like this, the chart of Apple. And yeah, and in here basically you can just use your mouse to drag, to look. You can drag the price up and down, you can drag the date, you know, back and forth. And then if you want to just go back to the normal setting, you can right click and reset chart view, and then you go back to the normal setting. And basically you're gonna have to be familiar with this platform, because you're gonna be using this platform a lot. Okay. So just make sure you get in. You saw how I logged in. It was very easy. You just literally, I'm gonna do it again because more people jump on now. So I'm gonna sign out, and I'm gonna jump back in on TradingView. So you go tradingview.com. Yeah, I wanna leave. You go to tradingview.com. You go up there, sign in, and then you just choose whatever email you want to sign in. I like to use my Gmail, Google account, and then that's it. Boom, you're in. You go to products, super charts, and there we go. You have your charts right there. Okay, so get familiarized with this. On your left hand side, you have all the options of the drawings, the tools you can use, trend line, horizontal lines, like everything that you need. You know, you have Fibonacci. You can get pretty crazy here, so don't worry. Like Elliott waves, like don't really worry about that now. Just make sure you understand the chart and you get familiarized with the platform first. If you right click on the chart, you can see appear some options in here, And today we're just gonna start start using this platform more, so you can start understanding as well. On the up left hand side, on the top left hand side, you have the symbol. So now I'm on gold. This is the code, the symbol for gold. Okay, you can see here gold, and this is the exchange, Oenda. All right, you can use other exchanges if you want. I'm just gonna use that. Because I'm on a free account, this ad gonna keep popping up from time to time. It's annoying, but you know, you're not paying for anything, so you know, it's a good deal. You just need to close it from time to time. Here, it's the time frame you're going to choose. Okay, so for example, now we are on the daily chart, meaning that each bar, each candle, it's in 1 day. So if you are really beginner, you don't even know what a candle is, don't worry, we're gonna explain what a candle is today. And then here you can obviously see this is a candle chart, but you can change to bars, to line, you know, you can change to bars, but we're gonna use candles. That's the most common one. It's the most used by traders, you know, the old school traders, the guys that trade from 1990 sort of thing. They like the bars because these were the first ones that they started trading. But yeah, nowadays we just use candles. Then we have the indicators, and that gets a little bit complicated, so don't worry about indicators right now if you're a beginner. And yeah, so without further ado, let's jump straight into the topic that we're going to talk about today. Also, guys, if you have any questions, please step in the chat, just ask the questions as we go. As I said, I'm already experienced with this, so maybe sometimes I say a word or something or a concept that you don't understand. Don't be shy, ask me. So for example, yesterday some people didn't know what a scalping is, so it was a great question. So I had to explain what is a scalp and the difference between a scalp and a swing trade. So if I start talking about something that you don't understand, just ask. All right, it's important that everyone here be on the same page and understand what I'm talking about. All right, otherwise it just becomes like overwhelming and boring sometimes if you don't understand what I'm talking about. I'm speaking Chinese, you know, so it's not fun. So make sure you guys ask me. All right. All right, so let's jump straight into what a candle is, because before we talk about chart patterns and technical analysis, we need to understand what we are looking at. All right, we need to understand what is this. All right, David, I see a lot of like green and red stuff, but what is this? This is a candle, and let's understand what a candle is. So let's go to, let's say, yearly candle. So each of these candles represents now 1 year. I changed the time frame to 12 months, meaning it's 1 year. So each candle, you can see 2019. Down here at the bottom, you can see the information. All right, so 2019, 2020, 2021, 22, 23, 24. Okay, and you can see that there is also colors. So there is a red candle and there is like greens, green candles. So when the candle is green, it means that the price went from here to that. So the price went up. So when it's green, the price went up. When it's red, means that the price went from here to that. So the price went down. All right. So with that out of the way, what does this represent? So this represents 1 year of price action, 1 year of price information. So the price went from here, went all the way down there. That's why there is this little wick that we call wick. Then went all the way up there and closed in here. So the year is started at this price, 1,500, went all the way down to 1,450, then went all the way up to 2,075 and closed the year at 1,898. The next year, it opened up at the same price that we closed on the last year. Then we went all the way down to 1678.74. We went all the way up to this 1955, and we closed in here at 1820. So we went from there to there. That's why it's red. Are we cool with that? So let me know if you guys are understanding what a candlestick is. So now that we understand what a candlestick is, we can now talk about, for example, the patterns, because now we know that this is only representing, see the ad coming up again, this is only representing the price action of that year. So let me go back to, for example, the daily chart. So each candle now is going to be one day. So this was Friday, this was Thursday, Wednesday, Tuesday, Monday, Friday, Thursday, because gold closes on the weekend. It's not crypto. So now that we understand that, and we understand, okay, this is a green candle, David, meaning the price went from here to there. And those little wicks, it's because the price went all the way up there, all the way down here. All right. This one, similar thing. We open up here, we went all the way up there, all the way down here, and we closed in here. And that's why it's a bearish, what we call a bearish candle, and this is a bullish candle. So when the price goes up, it's bullish. When the price goes down, it's bearish. Okay, so now that we know what's a green candle, what's a red candle, that's a bullish candle, that's a bearish candle, we can start looking for patterns. We can start understanding patterns. And to know chart patterns, basically you can do two things. First, you can download one of the books that I'm giving you guys for free. So for example, yesterday I was showing some people here that I have some books that here in my computer, finished books. I have some trading books here that they have a lot of chart patterns. Okay, so for example, this one, it's just chart patterns, hundreds of patterns in this book. And for us so you can, two things, you can either read one of those books, you can actually three things. You can, the other thing is you can look to trading chart patterns on Google, and then you can see here different chart patterns. Or the last thing, you can do like a trading course that teaches you chart patterns as well. All right. As I said yesterday, I do have a trading course. I teach chart patterns in my trading course, but there are many, I believe 99% of the trading courses out there, they're gonna teach you chart patterns because it's the minimum that they have to offer to you. All right. So doesn't matter where you get this information from, but it's important for you to get that information. I'm just gonna get here today on Google, and we're gonna explore now the double top pattern, and then we're gonna learn how to trade them. All right. So the first thing here is the double top, and as you can see, the double top looks like the Batman sort of head, right? So it looks like an M, McDonald's sort of thing, right? So this is a double top. You have one top and you have another top. So that's a double top pattern, okay? And I'm just gonna look for a double top pattern. Let me go, let's go to Bitcoin. Let's see if Bitcoin has, yeah, right here. There is a double top right here. So you can see the market went up here, create the first top, bounce, then create the second top, and then went down. So this pattern usually means that the market is going to revert. So if the market is going up, it means that after a double top, we're going to go down. That's not 100%, okay? That's nothing, no pattern is 100% in trading. So, but usually it's information that the market wants to revert the trend or wants to revert that move. You can see here the market was going up, create the first stop, bounce it, create the second top, and then revert back down. Okay, usually it's a reversal pattern. So in here, let me see if I can find, this is another double top. Look at this. The market's coming up, create the first top, bounce, create the second top, revert back down. See? And this is not rocket science, like it's just chart patterns, and they're gonna keep repeating over and over again. If I got it from here on Google, but if you go to those books, I'm pretty sure they're gonna teach these patterns as well. Any trading course, any good trading course are gonna teach you this pattern as well. And I think it's a good way to start. It's a good pattern to start. It's very easy to identify. It's very easy to see the M's. It's very easy to see the result of the pattern, meaning just need to get these ads out of the way from time to time. So meaning when it happens, you can see that usually the market revert back, right? The market doesn't continue the move up. So let's see if we can find, let's go back. Let's go back to gold. Let's see if I can find any double top here on gold. This was a double top that did not work. Look, it move up, create the first top, create the second top, but it doesn't break what we call the neckline. Okay, so this level here, it's what we call the neckline. So when the market creates the first top and it bounce, when it goes and try again, this line here, it's what we call the neckline. Okay, so when we break this neckline, meaning when the price goes through this level, when the market goes through this price, it means that it broke the neckline. Okay, and then it kind of, we say that kind of confirms that this is a reversal pattern. So now that you understand this pattern, I kind of give a little advice to you to understand the second pattern, which would be the double bottom. Why? Because the double bottom is basically the double top inverted. So it's just, instead of be the M, is the W. Okay, so here you have one top, another top. Here you have one bottom, another bottom. So that's a double bottom. Okay, so you start with those very easy patterns because they're gonna be easier to identify. And as you get experience, as your eyes start to get more experience, you can see this pattern more often and be like, oh, this is a double top, oh, this is a double bottom. And you're gonna see the effect in your brain of being more and more familiarized with the pattern. Okay, so let's try to find a double bottom here. Let's try to find a double bottom here. That's a good one. Look at this. The market's moving down, creates the first bottom, bounce, creates the second bottom, revert back up. See how it breaks the neckline and just goes away? So this is not like magic, okay? This is gonna happen over and over again, and you just need to study those patterns. And there is a probability. So yesterday I was playing around with the coin flip, because the coin flip is like 50% chance of heads and tails, right? When there is a double top, double bottom, usually it's not 50-50 anymore. Okay, so when we formed a double bottom and the market is here, it's not a 50-50 if the market's gonna go up or down. Now it's way more likely that the market's gonna go up. And that, my friend, it's when you create a trading strategy, okay, where you can be profitable, because you know if you bet that the market's gonna go up every time it breaks the neckline of a double bottom, you know that you have a higher chance that the market's gonna move up than down. And then as long as you have a good strategy around it, you can make money every time you see a double top and double bottom. Okay, so for example, you could say, all right, David, I think this is a nice double top, and the market moved down. It broke the neckline, and that was a nice move down right there. Okay, let me see if I can find this sort of, it's a small one, but I think you guys can see it as well. So the first move up, we bounce. The first move, the second move up, we create the second top, and then we move down. We break the neckline, and then we move down. All right. So just make sure you guys familiarize with this, and there are many other patterns that you can study. For example, flags, wedges, bullish pennant and stuff. But I'm not gonna throw many patterns at you because I think many of you guys are just starting right now, and I don't want to overwhelm you guys. So I just want to be very like, you know, slow and be like step by step, so everyone can be on the same page and everyone can understand. So again, the first thing you need is create an account on TradingView on this website. So that's the first thing you need. Then the second thing you need is to jump on these super charts and then start playing around. All right, cut down some Netflix time and play around with this. Cut down some video game time and play around with this. You know, take 1 or 2 hours a week at least, start slow and start understanding these charts and start understanding this website and start playing around with, for example, double tops and double bottoms, because they are very easy patterns to see in the market. Okay, and this candlestick, it's very easy also to understand. Maybe take you a week or two to get familiarized with the candlestick, but once you understand, okay, if it's green, it's because it's bullish, the market went up, or when it's red, it's because the market went down. I can understand those wicks, I can understand the body, okay, and there, you can also Google that. So you can say just candlestick anatomy. All right, just Google that, and then you're gonna see it. See, bullish candle, bearish candle, and you can study that and be like, okay, now I understand what it means. Because inside of the candlestick anatomy, there is also candlestick patterns, right? So for example, in my trading course, I put like a whole chapter of candlestick patterns because they are very important. However, we're not going to talk about this today, okay? We don't have much time to talk about this because it's a lot of patterns, all right? And probably just study the basic ones like this, all right? So you start looking at those ones. For example, the first one I learned was this bullish and bearish pin bar because they look like a hammer, all right? They look like a hammer, and that's very easy to identify. Look at here, look the hammer, see? So they're very easy, much easier to identify. So start with easy patterns, no rush, no rush. I can see a question here from Laura. David, if the top or the bottom is not equal, high or low, is it still a pattern? Yes, of course. Hello, Daniel, welcome in. Welcome, my friend. Of course it's a pattern, yes. They don't need to be perfect, aligned, okay? In nature, not everything's perfect, okay? And in trading, for example, you can say this is a double top, okay? You can say, oh, but this high, it's a little bit higher than that one. That's okay, that's okay. We don't need to be perfect every time. When it's perfect, it's better, okay, Laura? So, for example, I showed one down here. Let me remove this one down here. This is perfect. This is like easy, what we call easy money trade. I'm not gonna lose money anytime this happens. It's impossible. This is beautiful. This is textbook. This is something that you need to take a screenshot, save in your computer. You know, this is something that you're gonna find on trading books, because this is just perfect. Perfect move down, bounce, and then perfect bottom, perfect double bottom, you know, and then perfect break of the neckline. And you can see, look at this move, you know, this is amazing. I'm talking about gold, guys. So just to give you guys an idea, this is a multi-billion-dollar market. Okay, this is where gold. So banks, countries, central banks, they trade this. So you can make as much money as you want on a move like this. You can literally make millions of dollars on a move like this. It depends on your trading account, obviously, the size of your trading account. But just to give you guys an idea on how powerful this is and how powerful it's what I'm sharing with you now. So just understand those simple things. Don't overcomplicate stuff, okay? Because you're gonna see a lot of things on the internet of people saying a lot of complicated stuff just to sound like they are smart and good traders, but in the end of the day, they are not, and they are just trying to sell you something. So keep your chart clean. I love my charts clean, okay? And just study those patterns. For example, this one, how would you call this pattern here, down here? You have the first bottom, you have the second bottom, the double bottom, and then you have what? The triple bottom. Okay, so you have the move down, bounce, double bottom, little bounce, triple bottom. And then look what happened when we break the neckline. Boom. We go bananas. We go up. This was the bottom of this downtrend, by the way. So imagine you see this triple bottom here, okay, and you say, okay, I've learned with David that this is usually a reversal pattern, meaning that if we break the neckline, it means that we're gonna be bullish. We don't need the crystal ball. We don't need a lot of science and maths. We just need to recognize those patterns. That's your job as a trader. You study those patterns, understand them, create a strategy around them so you can make money whenever they happen. That's it. It's as simple as is, okay? Yeah, so they don't need to be perfect. They don't need to be perfect. Yeah, any questions so far about these chart patterns or candlestick patterns or anything like that? Let me know. Let me know. Let me see what I've put here. Oh, okay. Yeah, of course. Can we find all these patterns in all charts like Bitcoin, Ethereum? Yeah. That's a good question. And of course you can. Let's go to Bitcoin. Let's go to Bitcoin and I'm showing you. I showed before this double top here on Bitcoin. See? It broke the neckline. Boom. Down. Okay? And you can see this is a more kind of complicated pattern, but you can say that this is a double bottom. Okay, it didn't have a clear neckline in here, so it could be confusing for beginner, but this was a very obvious double bottom pattern, and this was the bottom of the bear market. Look what the bottom of the bear market gave us, a double bottom. If you buy Bitcoin here, you would be up 300% right now. Okay, so this is what professionals and good traders they do. They don't start buying Bitcoin whatever. They don't be like FOMOing. They don't like guess where the Bitcoin is gonna go because Trump said something, or you know what I mean. They actually wait for the pattern. All right, and up here, this was a beautiful one, by the way. This is a double top. It broke the neckline and we started the bear market. So imagine if you sold your Bitcoins in here. Imagine if you sold your Bitcoins in here. You would have saved 70% drawdown. It's a lot of money, you know? It's a lot of money. So imagine if you buy then back in here on this double bottom. it would be up 300%. You know, that's what traders do. That's very important. That's what traders do. Investors, they don't see those things. They don't pay attention to those things. They'll be like, oh, halving, oh, these and fundamentals and this and that, the news and stuff and the war, blah, blah, blah. Traders, they don't care about any of this stuff. All the traders care is about the charts. It's about this, what is in front of you right now. And the only thing that they care is pattern. So as long as you understand these patterns, you're gonna be fine. You're gonna be fine. So here you had a double bottom. Look. See, move down, it bounce, bottom. We break the neckline and we went up. Obviously, this is COVID, right? So outlier event, unfortunately. But if it wasn't for COVID, I'm pretty sure this would be the bottom of the bear market as well. You know, this is a very, very common pattern, guys. And what I'm teaching, it's not hard. It's very simple. Double top. This would be the neckline. It was a little bit messy, but you can see the bear market came after that. It's just the market giving you the information that we don't want to go up anymore, or we don't want to go down anymore. Because when the market goes up, we move up in waves. Okay, we move up like this. And when we go down, we move down in waves like this. Okay, and when we try, for example, we are here, when we try to create this push and we cannot get this push and we revert back down, it means, whoa, so all this idea in this scenario, it's invalidated. Now we actually gonna revert back and start a bearish move or a downtrend, whatever you want to call it. Okay, so to answer again your question, yes, you can see those patterns everywhere, and I challenge you to just look everywhere. Let's go. I'm gonna go oil. As soon as I tap oil, double top right there. Okay, what happened after the double top? The market went down. Okay, so you can see this everywhere. Just study those patterns, and I'm pretty sure. Look, double bottom here. This one did okay. It wasn't like a Bitcoin sort of move, but it did okay. It broke the neckline. It gave you a nice move, you know. And if you're a very good trader, you would just take this trade, you know, buy on the break of there, put a stop below there, and take your money, take your profits, you know, and be happy with your life. And yeah, double bottoms, double tops was probably my first pattern that I started trading. This one was good as well, you can see, and it wasn't perfect. Okay, so it doesn't need to be equal highs, equal lows. As I said, look, we created the first low, we bounced, we create the second low, it went a little bit lower than this one, but then revert back up, and then we break the neckline. And wow, okay, this one was amazing. See, this one actually paid really well. It went up a lot. So very easy pattern to see, very easy to see an M or W on a chart, very easy. And all you need to do is just, you know, spend some time looking at it, and you can change the markets, you can challenge yourself. You know, let me challenge myself here. Let's go Apple. Let's see Apple here. Let's see if we can find, because stocks trades a little bit different. You can see there is what we call these gaps, these like spaces, which is just gaps. So let's go up on time frame. Let's go to the monthly. Let's see if crazy chart, huh? What a crazy move. But for example, down here in 97, let me get rid of the ad. Again, I'm on a free account on TradingView, so these ads are gonna keep popping up from time to time. You have the first move, you have the bounce, you have the second, you know, double bottom. We break the neckline and we went up. So if you are in 1997 and you're a trader, you can definitely be like, okay, now it's time to buy Apple because it created a reversal pattern. Okay. And then you can say, all right, so this is a different pattern, but it's like a cousin of a double top, because the second top actually went lower, but it's also a reversal pattern, you can see. So you could have bought Apple here and you could have sold Apple there. It would be a nice profit, you know, 200% profit. Not bad. A lot of investors would love to do 200% in one move. Are the patterns same than strategies? No, the first thing you need is the pattern, then you need the strategy. So that's a good question. Let's look at the strategy now. Now that we understand the patterns, I think everyone can understand the pattern. Let's now create the strategy. Okay, it gets a little bit complicated, so if you don't understand, please ask me and I explain again. But now that you understand the pattern, okay, and everyone understand the candlestick, understand the chart, okay, I start getting the V. All right, I think I'm on the same page here, and I understand when the M forms, it's a reversal pattern, the market tends to go down. When it's the W, it's a double bottom, the market tends to go up. Now let's create the strategy. Let's make some money, right? Because we are here to make money. In the end of the day, we are not here to just play around on those charts. And let's make some money. And let me go back to the daily now. Let's not go to the 1 hour. Let's go daily chart. And let's go back to that double bottom that I said it was a beautiful double bottom. Can I play with the replay mode on free account? Oh, I can. That is amazing. This replay mode is amazing. So now, see, I cannot see the future. I don't know, so I don't get the hindsight bias. It's amazing for you to play around and to test the strategy and to test yourself as well, okay? So let's pretend we are here on time and this double bottom, it's happening right now on time. So what we have the neckline here, right? So we know that after we form this double bottom, if we break this neckline, the market tends to go up. We know because we saw the future, we know this is going to break up, but let's pretend we don't know that this is going to happen, all right? And what we're going to do here is simple. I'm going to use this tool, which is the tool that we can use here on TradingView, that you can put a long position or short position. So if you don't know what a long position is or short position is, basically long is when you bet that the market's going to go up, and a short position, it's when you bet that the market's going to go down. Here, obviously, we are going to bet that the market's going to go up because it's going to break the neckline of this double bottom. Therefore, we're going to go long. So we're going to put a long position here. We're going to buy as soon as it breaks this neckline. Or stop loss, meaning the amount of money we're going to risk is going to be, let's say, 4.5%. Okay. So the amount of risk we're going to take on this trade is 4.5%. So we're going to enter here at 1757, yeah, and we're going to put a stop loss, meaning if the market goes through our stop loss, we are out of the trade. We are out of the trade, okay, because we're going to be wrong. The double bottom is invalidated, all right? So a stop loss is going to be below this low, because if the market breaks this low, then there is no double bottom, because we know double bottom is this. Double bottom is not this, okay? So if the market goes back here, we are out of this trade. We're going to take it on the chin, lose our money, and go to the next trade. So we're going to risk 4.5%. And let's say we're going to go for 3-to-1 risk reward. Meaning, David, what is risk reward? I don't understand. It's okay. Risk reward is how much is the ratio. It's the ratio of your risk to your profit. So your target, your reward, your profit is 13.65%. Can you see here? 13.65%, which is 3 times the 4.5% you are risking. Okay, so that's why it calls here risk reward ratio. Okay, so if you say I'm gonna risk 1-to-1 risk reward, means that we're gonna target 4.5%. That's your profit target, and we're gonna risk 4.5%. So we are 1-to-1. So if you risk $1,000 on this trade, if you risk 1,000 here, you're gonna make 1,000. However, if you do 3-to-1 risk reward, it means that you're gonna make 3,000. Okay, so let's just pretend that we are going to do a 3-to-1 risk reward on this trade. So you're gonna press play here, and we are on the trade. See, it triggers, it breaks the neckline, it triggers our entry. Now we are in the trade. Now all we have to do is to sit back and wait and follow the strategy, follow the plan. Okay, in the middle here, your mind's gonna be like thinking a lot of things. If you're like me, you're gonna be like, oh, take some money, take some profit, because if you are risking $1,000 in here, and right there you are making probably $2,000, $2,500. So you're gonna be like, oh, take this money, $2,500 is very good. Like, you don't need to wait for, don't worry about these thoughts on your mind. Just follow the strategy. Okay, just follow the strategy. And then in here, the market went all the way back down to your entry. And then here you have a decision to make. Okay, it did not hit my 3-to-1 risk reward. What should I do? Should I cut the trade, break even? Should I give up? The market looks like it's not gonna go up anymore. Now we formed a double top. You can see how trading can get complex because of your mind. So don't worry about this stuff, especially when you're back testing. Just follow and see. Did we get stopped out? No, not yet. We did not get stopped out. The market is still moving. We're still waiting. And boom. Boom. See? If you don't follow your mind and your emotions and stuff, you would be able to take this trade and make your $3,000 profit and be happy with it. Okay? Do you move your stop gain as the price moves, or you keep a stop loss where it was at the beginning? That's a good question. It depends. I hate move my stop loss up. I hate doing that. I'm usually the type of guy that I'm either gonna make money on this trade or lose money on this trade. Okay. So I don't move my stop. All right. Also, I don't move my profit target. So some people would be like, oh, it's getting close to my profit target, I'm gonna move my profit target up a little bit. And then the price moves close, and then they move the profit target a little bit, and then they move the profit target, and then they move I don't do this sort of stuff. Like, I just basically set my stop loss, set my profit target, and I just sit back and wait the market to play it out. And if I get stopped out, fine, move on. If I hit my profit target, fine, move on. Okay. Obviously, if I get stopped out, I'm going to review the trade and understand why I got stopped out. Could I have done it better? So let's say in here, I got stopped out. I would see, man, the market moved all the way up there, and then I let the market stop me out. So therefore, maybe a 3-to-1 risk reward is a bit greedy. Maybe I should have done like a 2-to-1 risk reward. If I've done a 2-to-1 risk reward, I would have taken profits right there. Okay. So obviously, the more experience you get, you can play around with those rules. Every person will trade differently. Some people love to, after being profit, move the stop loss to break even. So if the price gets back to your entry, you get out of the trade and you don't lose money. I hate doing that. But some people love doing that. And that's fine, because they can't deal with their emotions. Okay. So for me, it's fine. I'm happy. I'm okay with the drawdown. Obviously, it's not emotionally easy to deal with drawdowns, but it's okay. And I just wait. All right. And sometimes I'm going to manage the trade. For example, let's say my profit target is right here, and the market is very very close to my profit target and I see this big bearish bar here, I get out. I'm not going to be waiting the market to just, a few dollars. I'm not going to be greedy, because of a few dollars. I'm just like, okay, I'm done. This is enough for me. I'm just going to take my money and run. So I manage my trades like that. I don't move my stop, but when it gets very close to my profit target, I'm going to be very glued to the chart and make sure I don't let the price go all the way back down to my entry or things like that. You know what I mean? Because that's basically, I'm leaving money on the table, as we say. You are making so much money and then you let the market revert all the way back because of a few dollars, a few points, a few percentages, just manage the trade. But this is more advanced level. As a beginner, I would say just set your profit target, set your stop loss, and just go for it. Let's get out of the replay mode and let's have a look on, for example, this triple bottom here. Because we're talking about strategies, right? So we're talking about a strategy with double top and double bottom. And I'm teaching you guys here for free a strategy that you can start trading today. So the double top, you're basically gonna sell the break of the neckline, put a stop above the double top, and just go for 1-to-1 or 2-to-1. For the double bottom, similar thing. You're gonna buy on the break of the neckline, you're gonna put your stop below the double bottom, and then you're just gonna target 2-to-1, 1-to-1, whatever you want to do. Just back test, play around with the risk reward ratios. Some people like to get paid quickly. I said it yesterday, I'm the kind of person that I like to get paid quickly. I like to take profits at 1-to-1, 2-to-1s, because as I said, I used to live in Australia. It's a very expensive country, and I like to make money on that day quickly and take my money and just be able to, okay, this week I've made enough money to pay my bills, sort of thing. So I still have this sort of mentality of, all right, I'm gonna just make my money and I'm gonna leave a little bit to run to see if I can, make more money with that trade. So let's go to Bitcoin, because Bitcoin had a nice double top that I showed before. And in here, this is the double top. Oh man, go back to Bitcoin. All right, let's get rid of the drawings. Let's play with the replay mode. So there we have it. So we are here, all right? Let's pretend we don't know what's gonna happen, because that's what happens in the real market. We move up, create the first top, bounce, move back up, second top. So right now, we are just waiting the market to break this neckline, okay? So what's the strategy? We're gonna sell on the break of this neckline, and because we are betting that the market is gonna go down, it's not gonna be a long, it's gonna be a short. So we're gonna enter on the break of this neckline. We're gonna put a stop above the top double top, and let's say we're just gonna target this at 1-to-1. Now I'm gonna be more conservative, okay? And here we are in the trade. It triggers our entry. And now we just need to wait the market to move, and then right there, the market touches our profit target, and that's it. We are done. We made our money, we are happy, and we move on to the next trade. That's your job as a trader. To go every single day, every single week, whatever time you have, look at the charts, identify the patterns, create a strategy like this. This strategy doesn't have many complex stuff, doesn't have complex names. It's not difficult, and just execute the strategy. So next time you see a double top, a double bottom on a Bitcoin chart, on a gold chart, on Ethereum chart, you can just watch this class again, watch this strategy, and be like, okay, that's where I'm gonna enter, that's where I'm gonna put my stop, that's gonna put my profit target, and then you just can demo trade. All right, so here on this trading view, you can go to trading panel, and then you can go paper trading. And then you can connect your account, and then they give you $100,000. Obviously, this is a fake money, but they give you $100,000, and then you can just buy and sell. Okay, you can buy and sell in here. See, and it shows up on the chart, and then you can just play around, let me see if this thing, see, and then it shows the profits and losses that you make on the trade, you know. So for example, you sell that, and then now it shows that you've lost $5,000, you know. So for example, let's go back here, for example, right? So for example, now we're gonna sell, right, because it broke on neckline. Our stop is above there and our profit targets it down there. So I'm just gonna play this, and then now we are profiting $5,000, and then we're gonna buy back, and then that's it. And then that was a profit of this trade, $5,600. Okay, so that's it. Commission will consume a little bit of your account if you exit at entry level, and amount of fee depending use leverage. Not many beginners know about this. Yes, you have to account of commission and spread and fees, of course. But to be honest, let me see. I don't think this is. I don't think it's important if you are trading high time frame chart. If you are trading like yesterday, I think there was a person that was asking me about 1 minute chart and about scalping. That guy is gonna pay a lot of commission and fees, okay? Because he's trading a very high volatile moving chart, and he's gonna be in and out of the trade many times in a day. So he's gonna be paying commission. So every time you enter a trade, you pay a commission. Every time you exit a trade, you pay a commission. And as long as, for example, if you are just in and out like this, one, you're not gonna pay that much of commission. So let's say from this $5,600 that you made, you probably paid $100 in commission, which is nothing. But if you are trading a lot, and if you're trading big size, as you said, using a lot of leverage, not using the right risk management rules, and using a lot of leverage, trading big sizes, you're gonna pay a lot of commission as well. So as long as you don't do that, you should be fine. So as a beginner, I think for beginners, they're fine with commissions and fees, because they're usually trading 4-hour chart, 1-hour chart max, daily chart, and those charts are usually okay. And then don't trade big sizes, because a beginner probably gonna have $1,000 account, and you don't pay much commission on that. But once we have like a bigger account and you start trading like big sizes, yes, you start paying a lot of commission, but as long as you have a good strategy, you should be fine. I usually, in my maths, put probably 10% of commissions and fees. So if I see that I'm making, let's say, $5,000, I'll say, okay, I know that at least $500 I'm gonna be paying fees and commissions and spread. So am I still profitable after deducting those fees? If yes, then I'll just trade that strategy. And this strategy here that I'm showing you guys, it's okay, because it's on a daily chart as well, so it should be fine. But good point. Good to point it out as well. It's important to know about this since the beginning. That's why Binance, it makes so much money because imagine the amount of volume that they do. Let's trade this. Let's practice a little bit more. Let's trade this double top. So you can see here the mark went up, bounce it, create the second top. This is our neckline. And this is what, a long or a short position? Are we gonna bet that the mark's gonna go down or up? We are gonna bet that the mark's gonna go down, right? Therefore, is a short position. So as soon as it breaks this neckline, we're gonna go short. We're gonna put a stop above the double top, and we're gonna go for 1-to-1 risk reward. So we are risking 19-20%, and we're gonna target 19-20%. So right there, it's a trigger. It broke our neckline. We are short now. Our stop is above the high, and we're gonna go for our 1-to-1. And right there is our 1-to-1. Okay, so on this trade we've made $9,700. Pretty good money, you know. And yeah, that's as simple as it gets. What is leverage? All right, that's a good question. So leverage is basically, let me get like a white stuff here. So when you trade, you have an account. So this account is $100,000. Okay, so if you want to buy, leverage is a tool that could multiply your account size. Yes, exactly that. So when you trade, you have an account. So this account that we have here, it's $100,000. Okay, so let's say Bitcoin now it's at $50,000, right? If you buy 2 coins, you are basically using your whole account, because 2 coins equals 2 times 50 equals 100. So you're using your whole account. Right now, at this moment, you're not using leverage. You're just using the whole margin of your account, the whole amount of your account. If you decide to buy 4 coins, then the size of this trade is the double, right? So it's 200. But David, I only have 100,000. How can I have a 200,000 position if I only have 100,000 in my account? That's leverage. So the exchanges, they give you an amount of leverage, okay, where you can use to trade. In this case, you are doing a 2x leverage. So you are leveraging your account in 2x, in 2 times. Okay. Some exchanges give you 10x leverage, others give you 20x leverage, meaning in 10x, you can have $1 million position. In 20x, you can have, so here it's 1 million, here would be 2 million. Okay, so instead of, look, if leverage didn't exist, the maximum amount of position of coins you could buy is 2. But because leverage exists, you can, let's say, buy 10 times more, 20 times more. So you can have 20 coins position, you can have 40 coins position because of leverage. But with leverage comes a lot of risk, because yes, imagine if you have 40 or 20 coins of Bitcoin at 50K, if the price goes up by 10%, it means that you made 10% of this whole position. Okay, so let's say in here, if you have 20 coins, it's not 100K, but it's 1 million, right? So imagine 10% of 1 million, it's 100K. So you double your account with that amount of leverage. Okay. However, if the market drops by 10%, you'll get liquidated and you'll lose your whole account. That's why leverage it's risky. You need to know, it's like a weapon, you know, you need to know how to use it, right? If you don't know how to use it, you can hurt yourself pretty bad. So you need to understand how to use leverage properly so you don't get liquidated, which happens with a lot of people. For example, you can tap here liquidation crypto, and you can see, for example, on this website, you can see that people are getting liquidated. See, this is the amount of people getting liquidated. So for example, on this day, 4th August, $300 million of longs and $127 of shorts got liquidated on that day. That's people using leverage on the bad way. They are gambling. And the professionals, the good traders, they actually are taking that money. Okay? And people who don't know how to trade, they are the ones on the other side of the trade giving money to the smart guys. All right? In this day, for example, 11th of April, $320 million of longs, a total of 685 million, like $700 million. It's nearly $1 billion getting liquidated. Is that people using leverage without knowing how to use leverage? So that's leverage, okay? It's just you using lending, borrowing money actually. The exchange is lending you money. You are borrowing money from the exchange to grow your account to make more money on the trade. So yeah, just make sure you understand risk management and know exactly what you're doing when you're using leverage, so you don't lose more than you can afford to lose. All right. So for example, if you have an $100,000 account, just risk 1%. Amazing. I'm glad you got it, Laura. I'm glad. It's a complex kind of concept, so not many people get it. So I'm glad you got it. Yeah, so make sure you risk. Let's say you have $1,000 account. If you have $1,000 account, risk 1%. Okay, risk $10. If you have a $10,000 account, then you risk $100. Just risk 1% of what you have. It's a very good rule of thumb, you know? So after you trading, paper trading here, after you practicing the strategy and you're trading fake money and you're comfortable with the strategy and you say, you know what? I'm very good trading double tops, double bottoms. I'm good to go. I'm ready to go for the market and I'm ready to trade. Let's go for it. And let me start with a small account. Let me start with $100. You know, start small, man. Like, people are greedy. I don't know why people are greedy, but like, start small, $100 or $1,000, and then risk 1%. You know, risk $10. No rush. Like as I said yesterday, your first year or two is just for you to study, practicing, and become the best you can be. You know, Rafael Nadal, like Djokovic. Those guys, like they practice every single day of their lives to win those like big prizes. You know, like you have to do the same in trading. You need to, you know, repetition is the mother of skills. Tony Robbins like to say that. So, you know, just practice over and over again, and you should be fine. Wow, that is 1 hour. My goodness. It's already 1 hour. Wow. Okay. All right, guys. That was quick. Any other questions? I think we spoke a lot today. Great stuff. I'm happy. Let me know if you guys have any questions while I sip my decaf. Yeah, I think this is gonna be a great live. We went over chart patterns, created an account on TradingView, look at candlesticks, technical analysis. You know, I even showed a trading strategy. That was great. We played with the replay mode. It's great that they gave the replay mode for free. Like before, you would have to pay to use the replay mode. This is amazing. You literally don't need to pay TradingView for a few months. You know, you can practice a lot just using a free account. That's crazy. All right. If there is no questions, I'm gonna call it the day, call it the night. I think this was a great session. As I said, it's just, you know, 1 hour. It's not much time, but I think we are talking about very important things here, and that's a second class of 6 that we're going to have. So we're going to have another 4 where we're going to discuss trading psychology. We're going to discuss trading strategies. So I'm gonna show you guys the way that I create my strategies, which is priceless. But yeah, because the community is so small and not many people is watching, I can give that for free, you know, because I know I'm not giving that away to a lot of people. I'm giving to just the community that now is growing. So I think it's worth it to give that to you guys, and that worth a lot. It worth a lot. And I'm gonna show you guys some great stuff. I'm gonna show how I multiply my $100 account into over $200,000 in profit in just 2 years. So that was with leverage, Laura. I'm gonna show the right way to use leverage, okay, and how you can multiply a $100 account into multiple six figures, and literally did the same way I did, and quit your job if you want and just trade full time. Yeah, where to put your limit order best once trading a double bottom top, or do you just put your order just after crossing the neckline? Yeah, like this is up to you. You can do both. I like to, I'm a like, as I said, I'm a breakout style, you know, like I'm a breakout trader. I like to go for breaks. Some people like to wait and put a limit order. So for example, if you have a double top like this, you could sell the break of the neckline, or you could put, as soon as we break the neckline, you put a limit order in here. So when the market pull back, it triggers you, and then you win a trade. So for example, in here, I would have got in here, but let's say you wait for the market to break and then you put a limit order, you probably would get in here. You know, both ways you would make money on this trade. It's just different styles. Some people has this style of, okay, I'm gonna wait for another confirmation, which means I'm gonna wait for it to break properly, and then I'm gonna place my limit order, okay? But I'm like, I just, you know, go for the breakout and I don't wait, because sometimes what can happen is you can miss the move, you know? It does this, it breaks the neckline and just goes, and never goes back to retest. So if I had a limit order, it would be sitting that, you know, and I wouldn't be triggered. But I'm gonna get more stopped out than you, because sometimes the market will fake out like this, you know. You can see like there was a bullish candle, like kind of false breaking, and then sometimes the market can just bounce here and stop me out, you know. And for you, you wouldn't get stopped out because the market did not break the neckline properly, so you would not place your limit order there. So there is no right or wrong, it's just styles. Like your style, your mentality is gonna be different than mine, and there is just no right or wrong. We're gonna trade the same pattern. Like I have my colleagues, we trade sometimes the same pattern, but we trade in a different ways. Like we place a stop loss in a different place, we put our profit targets in a different place, we enter differently. So the most important thing is to actually understand the pattern and just, you know, don't need to copy me 100%, you know what I mean? Because my style, my emotions is different than yours, you know? So the important thing here is to grab the idea and the what do you call it? Yeah, grab the whole, like, okay, the concept and the idea, and see like, okay, I understand what he means, and the way I want to trade is a little bit different than him, and that's fine, you know. Because as I said, the most important thing is to back test and see, okay, is your way profitable, you know, not even like better or worse than mine, but like, is it profitable? Because I can say there is people that trade double tops, double bottom better than me, you know, but because of my emotions, I know myself, and I know that if I miss a move, I'm gonna be pissed at myself. I'm gonna be like fuming. So I prefer to get stopped out, but go for it. But some other people are gonna have a much better way to trade, waiting for the break, and have a better risk reward, you know, and making more money than me. But it's just, I know myself, so I prefer to deal with my emotions in this way, to just like, okay, I'm gonna hit marketing here, I'm gonna go for this break, and that's it. You know what I mean? Yeah. In trading, it's very hard. Like, there is no black and white, right or wrong. Like, you know, the most important thing is like make money. Like, as long as we make money, we're fine. You know what I mean? Yeah. All right, guys. I think that was a solid 1 hour and 15 minutes. I'm gonna let you guys enjoy the rest of the weekend. Exactly. It has to fit the trader. Exactly. It has to fit your personality. And as long as you are making money and you're happy, that's it. Don't worry about other people. Don't worry about, oh, I made like that's very common. You know, like we trade the same pattern, and I make twice more than you. So you made like 1,000, I made 2,500, and you start feeling like upset because, man, I trade the same thing and he made a lot of money, more money than me. But like sometimes it's just better to make your $1,000 and be in peace with yourself than be very stressful inside of a trade just because you want to make, you know, more money. So yeah, just focus on yourself and focus on your process, on your emotions and your style of trading. All right, I'm gonna call it a day, stop the stream, enjoy the weekend, and I come back tomorrow with more stuff talking about what is the topic from tomorrow. I think is trading psychology, which is cool, which is very cool. And yeah, we can talk about chart patterns as well and answer any questions that you guys have. Thank you guys again. Peace out. Enjoy your weekend. Hasta luego.